All right, good morning, ladies and gentlemen. Welcome to Euro Stocks. Looks like I woke up this morning and Bitcoin is the real story, dropping again to lows just over about 5,100. What's up, Blair? Sorry about the late start. I actually woke up, saw Bitcoin crumbling, and I had to do a video that I'll edit and put out after this particular stream. But Bitcoin down at about 51 and change. Ethereum broke 165. That's huge news. And then you've got Dash, which we were looking at actually putting a short on here on a bounce. Rolling over significantly, Dash down a ton here, down about 13-14%. So big stuff happening in crypto. I think stocks may go this way as well. Actually just read something on IBD about I don't know if it's rumors, if it's substantiated or not, but Apple has cut iPhone order production, which could be very, very bad. At the same time, Tesla is looking very, very good. I mean, Tesla apparently is gapping up this morning, and we'll have to see how that rears its head. Come on, man. Gapping up a little bit, not a major gap, up 356. Nothing crazy, but IBD is actually calling this a cup with handle. They're calling a cup with handle on Tesla, which I wanted to look at because I don't remember a cup with handle. Yeah, crypto's toast right here, Flux. Just toast. Stay away. If you're not shorting, stay away. Period. That's the analysis. That's all you need at this stage in the game. But yeah, we'll go much more in depth, and I'll put my newsletter out for the Real Crypto Power Hour. If you're not involved in that, Flux, go ahead and check that out on my website, real-crypto.com, where we go over crypto every single day. And we've been kind of preempting. Let me show you the newsletter here, actually. Here's my email. Let me show you the newsletter from yesterday. Whoops, a bunch of stuff just 16? No, that's 3 days ago. Yeah, here's 3 days ago. 5,800 is the level for Bitcoin to get healthy again. But for shorting, anywhere above 5,400 will be good for a short entry with a stop at 58. And then yesterday we talked about... Where's my newsletter from yesterday? 11/17? 11/18? Oh, is it not on my... Hey James, I'm doing a power hour. Please be quiet, okay? Let me pull it up here. Hold on a second. Yeah, so here's yesterday's newsletter. We talked about no real change in Bitcoin. 5,800 is the get better level. Until then, we're not doing anything, just curling up. The big one to note, though, was Dash. Yesterday I mentioned if you got a pop and Dash would be a good time to short. We got the pop, and there was the pop right there. And then Dash is just obliterated today. And it looks like it was a good sign, took the rest of the market with it. Nope. No level's going to hold from here, Flux. No, it doesn't matter. What do you have positions, or what's your real impetus? Because I can answer your question if you say the question you really want to ask. Do you have bags? Are you holding from 11,000? Are you looking to trade it? Are you looking to short it? Give me a real scenario, and I can give you a real answer instead of a roundabout answer like I will be forced to otherwise. But let's get back to the stock market. Only a few minutes before the open, so I don't want to spend too much time on crypto. I'll be doing that later today. And so again, Apple apparently, Apple slashes iPhone production is the headline. Whether it's that bad or not is another issue. Let's take a look at the pre-market movers too. Again, I don't have a lot of time right here. Riot's down 7. Yeah, Riot's getting destroyed on this. Wanting in position for a small bounce. Don't do that. That's a sucker's game, Flux. Just don't do it. Literally don't do it. That's just a sucker's game. And it's going to come at a level, but no one knows what that level is going to be. So you're going to have to use price action. But you're deep in a bear market, Flux. Why would you fight against it? It's like, we've been in a huge rally. Why would you try to short it arbitrarily? That's not something I'd be comfortable doing. So Riot down about 7% here this morning, down at about 2 and 3. What else is down today? UWT is down a bunch. That'll probably save you some money, Flux. Probably save you some money. Yeah, if you want to bottom buy, my friend, you've got to know how to do it. You've got to know how to read the signs and the tea leaves and stuff like that. Asking some guy on the internet about where the next bottom's going to be is a surefire recipe to lose some cash. And I don't want to lose your cash for you for the sake of me trying to sound smart. I'd rather sound smart and save you money at the same time, which is do nothing. And sometimes that's the best advice you can get is to not trade. Someone that's always trying to pick every level. Very, very dangerous. Okay, so what do we got? We got Sphere. So far, not seeing anything. RETL, Drexion Retail. Trust Bull 3 times ETF on retail is up 8.5% today. So that's interesting action. Thanks for that, Flux. Good time to buy Tesla. I've been asking myself that same question, Blah. If Apple's cutting, see, here's the thing. The market from here on out is tricky, okay, and it's best to play it simple and not try to get too crazy with it. Tesla looks really good, okay, in the middle of what's kind of been a weird market. You can look at Tesla here versus the Nasdaq. Tesla jumped up here on earnings as of 10/23. 10/23 was here. We had a big move to the downside, a decent move to the upside, another big move to the downside. Tesla has been in its own world, okay, which is healthy. And it's a pretty large market cap company, so it's good that it can do that. It can do that, and if it continues, great. I think long term it's healthy from here. In the short to intermediate term, can it be susceptible if we take another leg down? And Apple slashing iPhone sales could be an impetus to us taking another leg down. I'm not saying it's going to happen, but I mean, it definitely could be. We had a couple of decent days here, but that doesn't mean that we're done. IBD was mentioning Dow Jones actually finding strength at the $225,000 level, which is 2,500 or 250 here on the DJX. Dow leading is usually not a good thing. What's up, Eli? So Nasdaq definitely below. I don't know about for better price, Blah. I don't know how much farther it's going to pull in. Here's your 200-day moving average here at about the 311 level. We're only at 354, so that's about, what's that, like 10% lower? 11% lower. It's not a huge discount. I do expect Tesla to go up much more as we get into a healthier market, whenever that may be. The question is, are you going to hold this from this level? So if you do want to get in Tesla, I think it's probably okay to take a smaller position here and kind of see how it reacts. Just get your feet wet. Not enough to make you a ton of money, but enough to get you interested. Okay, maybe a 10th or 15% of your position, and then kind of see what it does. If it continues to make highs and gets above 390 here, maybe it could get you a little bit more interested. But with the market kind of, stuck in a malaise, it's always dangerous to buy a singular name. But I will have to say, my wife's Roth IRA is 100% in Tesla, and I'm cool with that because it's a longer term position. If you're thinking much longer term there, Blah, I would say, yeah, go ahead and buy it. If you're thinking for trading, I would probably say let it go and wait for the market to be healthier. I think that's how you play Tesla. You play Tesla longer term. It has shown extraordinary volatility, as you've seen here. Many trips up and down, gaps. So you believe in the story or you don't. So buy it or don't. But from a trading perspective, if you want to trade it, maybe try to trade it on a breakout, but it's going to be a very small position, and I do expect some volatility coming into Tesla. That being said, it has not been volatile with the volume being very declined like this. Just look at this daily chart at the volume, and the only time you see price action like this is right here, and then let's see what price does. It rallies, comes back down to that low area where it broke out from, and then continued going up until a bunch of weird crap happened. But put the weird crap aside, and we should kind of slowly drift up from here, I think, intermediate to longer term. In the next couple of months, it's anyone's game, but I think Tesla longer term is good. So buying at this recent high is a little risky. Long-term bags, yes. Intermediate-term bags, small positions. Short-term bags, probably not. Yep, market just opened. That's when you see all this green stuff over here. So we didn't get to go through too many pre-market movers. Wasn't anything super exciting in the pre-market, to be honest with you. The big story that at least in my mind freaks me out a little bit is Apple saying that. Well, let's go read the article. Actually, they say that Apple cut production numbers, and we'll see how Apple reacts on this. Is an IBD article. Read through it. I think this is important. Again, Apple is on all major indexes. It's a Dow component, a NASDAQ component, and an S&P component. $1 or $1 trillion market cap, and affects the indexes in a huge fashion. So it looks like all these, NVIDIA, TSEM, MU leading early declines. Micron linked to a probe of antitrust violations by the Chinese government. But I'm really curious where this cut in production came from. Wall Street Journal reported that they slashed production numbers lower than forecast demand. So that doesn't give any numbers. Maybe we can get a link to that article, and maybe it'll give us some numbers. Because here's the thing. What does slash production mean? 0.5%? 1%? 10%? I'm just scanning for numbers here, actually, is what I'm doing. So last year, many suppliers were hurt by Apple's excessively optimistic initial production forecast, which is slashed by 20 million units for the first 3 months of 2018. I'm looking for percentages here, but I have a feeling that they're not. They didn't get percentages because Apple's not going to announce this publicly. So it may not be bad news for Apple. What they're saying down here, guys, is that Apple has been enjoying record revenue and profit for the last year because they're raising prices is what they're doing, that they're able to. And so that's why Apple hasn't been hurt last year by cutting production. So in time that will begin to falter. Whether that's right now or not is hard to say. But Apple holds a huge weight with the market, guys. So if Apple goes into a deeper correction, it absolutely could take some of the indexes with it. So. And Apple, here's the 200 line in Apple. It's living below that 200 level at this stage of the game. Apple Watch has been selling loads. Yeah, I don't think that's a super big sales driver for them, Justin. I mean, the people that are going to buy the Apple Watch have the iPhone. It's not like you're going to see 1 million iPhone sales and 10 million Apple Watch sales. I think that's probably not. Kramer freaks out. Fed. What's that about? Do they know nothing again? Kramer, what's he doing? I don't see it on CNBC website. If you have Sancta, if you have something else on that, I wouldn't mind hearing about it. Did they put out their plan? Focus on opportunity as market awaits Fed. That's kind of a Mad Money section on their website. I'm looking for something definitive. So here's the last article. Focus on opportunity as market awaits Fed. He's thinking, the last time I saw Kramer, he said he's hoping the Fed stops raising rates as aggressive because of the better economy and the job numbers being good. So he's hoping that they actually stop raising rates. Yeah, if the Fed declares victory in the war against inflation, that's what he's looking for, a market bounce. If the Fed keeps beating the economy over the head with a series of rate hikes and the president's simply shining on us, then the industrials and the tech will continue to get mauled by the bear. Yeah, that makes sense. I mean, that part makes sense. Jim Cramer isn't all garbage, by the way, guys. He's a pretty successful hedge fund manager. So you do have to at least listen. All right, Apple down 2.5%. Not super happy with the action here. I don't like the negative Apple headlines and the price action on Apple. Elevated volume here to the downside, weak action to the upside. Although on the futures, the action to the upside has been a little stronger. but we could see weakness this morning. Apple already down 2.6%. Looks like it's kind of taking it on the chin. Again, the first half hour of the day is the time where all the shakeouts kind of occur, and it is a Monday, so maybe they're trying to scare us, and we'll see how it goes. What's up there, Paul? Paul says, so when economy is good, you can't raise rates, and when economy is bad, you also can't raise rates. Well, depends what you're looking for, Paul. We're talking about stock prices here, not necessarily the general economy. And that's the difference here. You have to kind of separate your what's good for the average layman person to what's good for my stock portfolio. You have to have those two different mindsets and be able to separate those. And what's good for the economy isn't always good for the lay individual, and vice versa. And so the general market sentiment, I think, from the bigger macro picture, as I understand it at this stage of the game, is that growth has. I think that the institutional investors think that we've kind of hit peak growth in the U.S. economy. There's some headwinds ahead, and you have some global slowing. You have the Fed increasing rates that we haven't seen in a very long time. So that means growth is slowing down a little bit. Now Apple's cutting production. Okay, so general stock investors look for a place to grow their money. If there's no growth left in the general stock market, they're obviously seeing some opportunity in retail. Oil has been kind of on a slide as of late, so maybe they're going to start putting some more money in there. So they're going to put money in these different sectors, but apparently they've seen the growth in tech wane a little bit, so adding more interest rate hikes would not be bullish for the stock market because it's going to put more a damper on the economy, is the general sense. So if you kind of picture, I don't know if I can, let's do this with super technical Microsoft Paint over here. So if you're looking at the economic cycle, because stocks really work on macroeconomic theory and what the investors think about that macroeconomic theory, it's always fun. Okay, so there we go. So, the Fed would like inflation like this at about 2% all the time right there. That's what in the Fed would like. Our inflation right now is kind of like this. Oop, James just bumped the table. Our inflation right now is currently a little bit elevated, and the Fed's going to want to bring that back down, which will require the raising of interest rates. Okay. Hey, Ethan. Hair looks great, buddy. Hey, do your exercises, okay? Now, the stock market wants to do this, but if they raise interest rates and try to curb inflation, that will actually end up curbing the stock market into something like this. Okay, so while the Fed is trying to curb inflation, it does affect the stock market, not extremely directly. It's not direct, but it's enough. There's enough. Because all of these companies have debt. Very few of these companies have no debt. And servicing that debt becomes more expensive as you raise, and so that they're less likely to have capital expenditures into R&D and other things like that. They'll remove that capital and they'll service the debt. So as the Fed raises rates like this, fairly steady, there's going to be a level, and there's no exact number where that level is, where it's going to start affecting. Right? Then we kind of cross that level over here. The market is forward-looking, so let's say we're here in this cycle. The market's looking ahead, and they're saying, okay, we're going to get 4 more hikes before X percentage of the companies aren't going to be able to borrow anymore. Maybe we should take some profits off here before we reach a potential headwind in about 3 months or something like that. Okay, so we're here. The economy isn't bad by any stretch of the imagination. But the market's looking forward, and that's the thing, is we have a forward-looking market. And it's kind of hard. It's a lot of moving parts. It's hard to keep in your head and even get right. I mean, keep in mind, we're individuals trying to do this here, and that's why I like charts, because I don't have to, I can keep all that stuff in the back of my mind and it's kind of a loose, jello-y like glob. But in the front of my mind, I can look at the charts and I can be like, okay, what are the institutions thinking? I spend a vast majority of my time thinking about that stuff and how it impacts institutional thought processes, and and I try to balance that with what I see in the charts, and that's generally what I attempt to do. So now, during a market topping situation like this, is a little different. You just kind of have to notice the technicals, and then when you see we have the downtrend, then you can be like, okay, what's going on? And Justin said, what should long-term investors do at this stage of the game? Well, it depends on what you already have in your portfolio, Justin. Are you all cash? Do you have positions? Are you long Amazon? You've been long Amazon for 15 years. Long-term investor, has a lot of connotations. Are you in mutual funds at your job? So if I know a little bit more about a specific situation, I can tell you what, in my opinion, would be kind of a more advantageous move for you. I want to glance at the crypto sphere real quick and see what Bitcoin's doing. Dash is rolling over there, guys. Remember we talked about shorting Dash a couple days ago on a pop? That would have been a very good entry point. If you got somewhere up there, that would have got you 15% to the downside. Ethereum, guys, breaking that 165 level is huge. Huge for me. And Bitcoin into new lows as well. So I just thought I'd look at that. You have positions mostly in index funds. Okay, so technically where we're at right now, Justin, is, but also some individual stocks such as Apple, Microsoft, and Tesla. Okay. So Apple is kind of in the middle of making a base, okay? It's really what Apple's in the middle of doing. Hold on a second, guys. I have no water with me. Let me go grab some water and I'll be right back. All right, guys, I'm back. Have a good day, Ethan. You too. Love you. All right, I'm back. So Apple will go down slow. Let's see if I missed anything here. Overall, my portfolio is up 8%. I have some cash on the side too, but not too much. Yeah, so here's the large market situation. I think is that we have our low here. If we undercut this low, or if we have one or two more distribution days, we'll probably go back into the correction. Okay, so there's our low this is the NASDAQ futures market, okay? NASDAQ futures market. If we undercut this, we're going to go back into the correction. All right, technically. Does that mean we have to go lower? It really doesn't. We can meander sideways here. I'm still maintaining. I really haven't done anything with my NQ, with my TQQQ positions. I just haven't. If we undercut this low right here, it's going to get a little dicey. It's especially for me because I'm invested here and I'm invested here. Okay, so it's going to get a little bit dicey if we end up having much lower prices. Apple still looks like it has quite a bit that it can fall. Amazon on last Friday looked like it still had quite a bit it can fall. These are kind of the two biggest movers in the market right now because of their market cap weighting. These affect these indexes the most. But at the same time, you got a bunch of other stocks, retail stocks, that are seeing a little bit of buying. So it's not a very expansive broad market sell-off. At the same point in time, it's still a sell-off. And we don't see any other major indicators of growth. So if we undercut this level here, that's going to be tricky, guys, to be honest with you, because we could probably stay lower for kind of like Bitcoin, right? Like we recently undercut in Bitcoin. We're probably going to stay lower for longer. We're going to stay lower for longer if we undercut this 6,600 level. If we undercut that, we got another 3 months of winter, in front of us of what we already have right now. I currently think we'll probably come back and rebound sometime in the first quarter. Hold on a second. I personally think we're going to come back sometime in the first quarter. It could be January 1. It could be January 12. Could be March, or February, March 15th. I have no idea. But if we don't undercut this, and if you're already living down here, I would probably say in your case, Justin, I would probably maintain most of my positions. I think Tesla at this stage in the game for much longer term investing is good. I think ever since they became profitable here, it's going to be really hard for the bears to make their money, and they're just going to have to short cover at every drop in Tesla. They're going to have to try to do some short covering, and I think that's really going to put an upward momentum into Tesla. Personally, I want to go check on FinViz. I want to see what the short float is in Tesla. It's always been in like mid-20s. It's at 23 right now. Is the 23%. So I'm looking right here. Where is it? Oh, it's behind this horrible video. Okay, there it is. So 23% is... So here's the float of 128 million. So you can extrapolate that, and you can go, okay, what's 128 million divided by 23%? So 556,000 shares. Is that right? Yeah, 556,000 shares is shorted. That doesn't sound right to me. Where's the... I thought they told you how many days it would take. Relative volume. There used to be a metric where based on average volume, they would tell you how long it would take for the shorts if they just rip-roared through the price to get even, for the short float to be zero. Anyway, 128,780,000. That's how many shares there are times 0.23. Okay, so they have 29 million shares that are shorted, and if their average volume is... let's see where the average volume is here. Average volume is 10 million shares. So that's actually not too bad if they have 10 million. So if they just rip-roar through this, that would give them... maybe that's what short ratio is. No, short interest ratio. But that's about what the math equates to, about 2.92 days to cover. It's called days to cover. That's what it's called. And that tells you how many days to cover. So I guess they could cover that relatively quickly if they really wanted to in Tesla. But in theory, you're not going to get 100% of the day's volume is short covering, and so you're probably gonna see Tesla price increase as those shorts do cover, and that's part of, I think, what you saw here is quite a bit of short increasing in Tesla. You did mention Microsoft. Let's look at Microsoft. So Microsoft actually holding above its 200-day moving average is pretty healthy. We see, we'll take a look at some of the other top techs. Excuse me. But Microsoft is obviously tech leader, doing pretty good right there. Quite a bit of large red candles. Some buying in many of these, but we're already, up pretty high. You look at Apple. Here's the 200 in Apple. We're already below the 200 in Apple. Below the 200 in Facebook. Oh, Facebook dropping off a cliff today, guys. 3.4%. So no bouncing right here whatsoever. And I think that's the major difference between Microsoft and some of these. Is Microsoft, you can see, kind of maintaining a base at a high level. Could it roll over? It could roll over, but so far it's holding up better than most, and probably anticipate that continuing unless the market just really wants to take another large leg lower. And if you want to protect yourself from that, I say you arbitrarily sell. But another leg lower, I don't know if that's necessarily in the cards, if that trend line will hold. But that would take us maybe down towards 62. Looks like we bottomed about every $1,500 on the NASDAQ. So we bottomed here at about 69, 60. That's only 300. Oh, these aren't 1,000. 66. So whatever this distance is here, you're kind of looking at that for maybe another measured move lower. That takes you down to about 62, 62.50 and change maybe if we get another leg lower. And that would be about 7%. So keep in mind, we've pretty much bounced off of each of these lows too. Anytime you get a big high volume day, it's proven to be a bottom, like this day, or at least near the bottom. So here's the bottom there. This was a higher volume day, but here was our prior low right there, and accumulation on both of those days. So very long answer there, but I think for a long-term investor, I think you at this stage of the game, you stay at least 50% invested, more than likely. You just kind of stay with it. This shouldn't turn into a 2007, 2008 scenario. Even if we take another leg down to about 7% here, that could be another buying opportunity for some of that cash. If you want to talk about raising more cash, Apple being relatively low at about the 200-day at this stage of the game. It's been down here before. You see here, here, and here. So hopefully it can make a quick turnaround. Bounce off of this trend line would be advantageous. But we did some analysis last week, if I remember correctly, where that could lead us to just some lower prices here. So okay, where's my his weekly chart? That's what it was. So here's that longer-term analysis on Apple that we did last week. So it has this major trend going back to the bottom of the recession, 2008, right here. We've maintained that. And in between, we've had these two rises. Now this third rise that we're kind of in the middle of its drop. Okay, so this is kind of what we're dealing with. I think I did miss your comments, Trevor. Sorry, I'll get to that in a second after I finish my thought here. So the general thesis here is that here's these lower trajectory trend lines in Apple, and then these higher trajectory trend lines as we have been getting towards the top of these ranges. Okay, so we've already undercut this. We're getting close to touching the second trend line, very similar to here, maybe very similar to here. And in each of these instances, it's come down and formed this third trend line. Will Apple touch this trend line in time? I don't know. And that would be a pretty deep bear market. Now, I don't know what the stock market would look like at that stage of the game, but if you're up 8%, Justin, I wouldn't let too much of that turn into a loss, especially on Apple.
We have apples.
Yeah, we do have apples. So we'll see if we get to this trend line. I hope it's not in the cards, because that would I mean, that would destroy the market. That much market cap being withdrawn from Apple. That'd be about a 33% drop from here. That would put Apple sub-trillion market cap. And to be honest with you, before we went $1 trillion Apple, I was thinking to myself, man, when $1 trillion Apple gets here, it's going to have a big drop on the way down from that $1 trillion perch because it's just so high up. And it is. And I mean, Apple has the biggest cash hoard in the industry. It's got a lot going for it, but we'll have to see. We'll have to see if it can maintain that. I mean, it has so far. It has been the golden child of the stock market. There's never been a company like Apple that's just been. I guess maybe Standard Oil back in the day. I was going to try to calculate how much cash they had. So cash per share. So they've got. Let's see how many shares they've got. They got 4.7 or 4.74 billion, and they have $22 per share, or I'm sorry, $13.97 times 13.97. So they got $66 billion sitting in cash. So huge cash hoards. They could pay special dividends, but I don't know what they're going to do. Whenever they fall off their crux, it's going to be a big drop. We thought they were going to do it here. Actually, kind of thought they were going to do it here too. But each time they've come back, made a new low, and moved back into new highs as well. So we'll see where we stop here. Ideally, we stop here on this longer term trend line here, and you can see that has proven to be support here. Not really so much here though. Not really so much there, but we'll have to wait and see what happens on Apple. But there is definite potential for more downside in Apple. Microsoft's looking healthier. Nasdaq down 1.65% right now. All right, let's see what's kind of. Let me get to Stratras' question before I get more distracted. What's up, Stratra? Would appreciate it if you could take a quick look at the Nifty chart on Slack. It's below the 200-day SMA and seems to be confirming a great-looking inverse head and shoulders. You put it in Slack? Yeah, let's take a look at it. Indicating the end of the correction. I'm waiting for more follow-through for a swing. No, it looks like you already got your follow-through. Let me go check it out on the trading view. Getting a bit of a bounce here on Bitcoin. Okay, a little bit. That's not bad. You'll see that video shortly. I've got Nifty B's up here a couple of times. Is it Nifty B's? Okay, so I've got, it looks like it's the same, and you have the 200 and the, what moving averages do you have up here? Just Nifty? Oh, okay, there we go. I get no volume, though. You have volume. Where's my volume? Where's my volume? I need volume. Charts one. Okay, well, okay, so I'll do a little bit of analysis here on Nifty Stratra, and then I'll do Nifty B's in a minute because it has volume. Okay, so what you have here is, yeah, I guess kind of a little mini inverted head and shoulders. Your actual buy point was like pretty much, I think, over right there. I think that's your buy point. Over a little, you can take these little consolidations right there. Can be really healthy off of bottoms. So I think that could be a nice indication of a bottom. So you have kind of two lows here, which is good, and then you have a little consolidation off of a bottom, and then it starts to rally. I think yesterday was your buy point. I think, unless maybe that was Friday. Friday or today when it dropped back down was more than likely your entry point. So I think it looks okay from that perspective. Now let's go to Nifty Bees and get some volume. Okay, so yeah, definitely a little different here. There's a lot of, it's probably not very liquid. Yeah, only a few thousand shares traded, which is why it's weird. See that? 14,000 average shares. Even over here, you're looking at 42,000. So the volume's increased since the low, which is good. Okay, so it's been at an elevated volume. It hasn't been selling off. That means they're kind of accumulating it. And it's making some highs here. Yeah, probably could be interested in getting in the Nifty at this stage in the game. Now, again, this is an index, so you're looking for longer term appreciation. There could be some volatility, right? Like it could go up and come back down and shake down and go up and then go down and shake down and kind of start to curl back up again. You are going to probably have some volatility time as the market players play themselves out and challenge each other. But it looks okay for a bottom on the Nifty here. Hopefully it's good for a bottom right there. Now, there is another potential here for an actual head and shoulders, a larger head and shoulders pattern. So you're going to want to keep this in mind too at some stage in the game. Now let's go back to the Nifty for this. Okay, so there's that double bottom. Could also be considered a neckline. And while I wouldn't necessarily call for this, I would. Now I'm not as in tune into the Indian economy, but I think this nice little base right here, nice little consolidation level, does put us in. What's up? Hold on. So anyway, yeah, looks good for a rally from here after breaking this little base. Keep an eye out though for a potential right shoulder and some kind of topping volumes, reversal candles, doji candles, distribution candles, stalling candles. There's a myriad of signals you can look for there on the Nifty. Any kind of lower high would maybe indicate stalling and maybe a potential for a trend line you can draw at some stage in the game. Like here, there was a trend line you can draw right there. They probably could have got you out of that trade. So here's a similar consolidation with a little run up, and then it kind of drops, and then there's a trend line that can get you out. And if it sets up again, you can get back in, and then it's probably going to negate what would be a shoulder. All right, so NASDAQ 1.6%. Still happy chilling here to the downside. Apple down 2.89%. But yeah, at this stage of the game, I would at least try to stay partially invested. We're down here, probably gone through a majority of the move. I don't think the move is going to double from here. Like, I don't think we're going to take a measured move from here to here and then, move this from here to here. So I still think you stay invested. I don't think we're going to drop back down here to 55 from 8,000. It doesn't seem likely. Yeah, that's a 30% drop. That would put us firmly into a bear market and probably one of the worst corrections in market history. Top 10 for sure. Top 10 for sure. Now, if that did happen, I would expect a strong bounce out of that, to be honest with you. The economy's not bad. And something else I heard the other night, I was watching Fast Money, I thought this was interesting. They said that the stock market has never led a correction or has never led a recession. They said the recession has always led the stock market. And I thought that was very interesting. I haven't done my own research on that, but I'll kind of take the guy at his word. Most of those guys know what they're talking about. What's up, Brandon? Yeah, I was confused by Tetherus the other day myself. Tetherus is Tether US. That's what it means on TradingView. It's just Tether US. And then, sorry, I know it's stocks. Just looking at charts, is GE making a double bottom on the monthly? I don't think GE's making a double bottom on anything. It's just making lows, man. Remember the other day? I think it was it Kevin? I'm not sure if Kevin's here. You hear Kevin? I don't see Kevin today. Kevin was saying, should he buy GE? We were bouncing here. And I'm like, well, it's got some good volume. Maybe if it breaks above that, could be good for a little trade. But, I really don't think that you really jump into GE. You want more bullish action. And then look at this. No bullish action. Looks like the rest of the investment community just dumped all of their GE shares. $12 to $8. I mean, come on, man. This is just a tremendous beating on a stock that 573 would be your low if you're looking at a monthly chart. I would not be catching falling knives at all on GE. There's better fish to fry. I'd much rather buy Tesla than I would buy GE. That being said, look at that bottoming candle on the monthly. If you get that bottoming candle on the monthly, extremely high volumes like that, sure, go ahead and buy there. But by then, you've already gone from $5 to $10 in a month. It's already doubled on you at that stage of the game. Okay, so yeah, GE is, the chart is telling you what everyone thinks about GE. Just because it's GE, don't let that get it twisted, guys. GE is a very old company, very legacy, maybe difficult to turn around. I think it's still a Dow component. If this thing gets delisted from the Dow, let me see. Actually, no, it did get delisted. I think Apple took its place, if I remember right. I think GE's off the Dow. Yep, they're not on the Dow anymore. It was on there for more than a century, and it got kicked out. This was a while ago. Oh, it was June 2018. The last original member of the Dow Jones Industrial Average when it was first formed was dropped on June 18th. Or, when the Tuesday before June 19th. I'm not sure what it was replaced with, but yeah, absolutely. GE is no longer in the Dow, so IBM, who replaced them? Google's not in the Dow yet. That's interesting. Anyway, doesn't matter. But yeah, I would not be cherry picking GE at this stage in the game. Oh yeah, look at this. Look at this volume. It's extreme hot garbage. Yeah. All right, Nasdaq now down about 2%. Apple down about 3%. Expanded its drop a little bit here. Amazon down 2.69%. Amazon looking like an H pattern. Not really. Amazon doesn't look very good to be. It doesn't look good at all. And Apple paused longer than most before it fell. They were propping Apple up, you see here, and then they've kind of start letting it fall. Lots of gaps on the way down, not looking very healthy. And the Nasdaq continuing, even after the first half hour, is not a good sign. Nasdaq continuing to the downside. The other day, both of these days, we've seen the Nasdaq kind of stop, and this one reversed. This one did not, in terms of price action throughout the day. So we'll have to see what happens throughout the day here. But if we get another big down day, which it looks like we may get today, could be kind of game over. Maybe. Damn. So our volume so far, not as high as we had over here yesterday, but it has been kind of a continuous sell-off. This is the 5-minute chart. It's been very very steady. Maybe we get a bit of a buying candle here. That would be nice. We'll see if that actually happens though. So Friday's open. We see volume around the 12,000 level. Here we're also around the 12,000 level. And previous day we were above the 12,000 level on some elevated buying candles right there, which was nice. And the two bottom candles here, elevated volume, which is good. So I mean, here's the thing: institutions are going to be picking at this thing. They don't buy all their positions at once. It takes them a very long time to take a position. This one also about 12,000. So we're kind of in line with averages here, and hopefully that reversal holds. That would be pretty nice. I'll have to wait and see. I don't want to focus too much on the 5-minute chart. So, but Apple again being a huge component, not looking great right here so far. Living under that 200-day moving average. Tried to rally above it feebly. Weak volume. Didn't even close above it. Yeah, it doesn't really look very good, to be honest with you. 50 rolling over there, and we're going to come up to kind of the death cross. What's considered the death cross, the 50-day and the 200-day. Probably looks like in a couple of weeks we're going to cross it here. When's the last time that we actually crossed that on the NASDAQ? 2015 would be my assumption. So here's the last time we had a death cross, and if you look at it, if you look at the death cross right there, after the death cross, not a whole lot happened. It kind of bottomed out right there, then started a big rally into highs, and then this one ended up rolling over again. And before that, we kind of came out of a choppy area here where the moving averages were converging for a while. Right there is part of the 50 undercutting the 200-day right there. That was also a low. And the 50 undercutting the 200-day here was also just after a low. So, we talk about those high volume sell candles, and those basically implying that the worst is behind us. Definitely still possible that the worst is behind us. And if we do get that cross here, and we do end up chopping around, we'll see what happens. Let's go look at this price action here. Whoops, where are we? There we go. So here's the death cross. So before we crossed, we were actually up towards that 200-day, and then it rolled over again. Then we had the death cross. Now we're a little bit different. I guess we're not too different. We're still living below the 200-day moving average. But we're not elevated off of these lows. We're like near the lows. We're here while we're here. So we could take another leg lower and then bottom kind of around the death cross time frame. It looks like that's kind of been... never did have the cross here. We crossed here, but already well off of lows. Well off of lows. This is a different situation. So there's kind of a death cross, if you will. Right there, but the 50 was very flat, which we're not right now. The 50 is rounded to the downside. I'm sorry, that's the 200. There's the 50. Okay, so we're lower here, and we were close, and I think we continue to undercut, and then we never had our high volume candle here. We just kept having higher volumes until we ended up with the high volume candle. And remember the volatility we talked about. Look here, it looks like it was coming down right into the lows after it crossed right there, and then it just kind of reversed. Some big volumes right there. Then it reversed on lower volume, and just continued to rally right throughout there in 2011. So no major bounces here, I think is kind of a difference. No major bounces, but we could see a bounce. Again, as long as we maintain above this, I think we're going to be better. If you look at price action, Thursday was a pretty good day, had elevated volume. They actually, on IBD's charts, it was an elevated volume. I got to go here in a minute, guys. I'm just rambling for too long. But yeah, the indexes look okay. But we got to hold that level there at 6,600, I think, at this stage of the game. But these bounces have been pretty feeble, and that's a little disheartening, as you'd expect a little more accumulation in some top names, which we don't see. We don't see that yet, and I think that's, at this stage of the game, I think that's what can end up being the breaker to this market, is that we don't see major accumulation in the really big names. I think that's the kicker here. So let's list coins. Let's do a little quick examination of the charts, and then I'm going to get out of here. I want to look at top coins by market cap. We've done a similar exercise in the past. Not exactly this, but okay. So let's look at Apple and see if there's any accumulation signs. Right now, 918 billion market cap. So we do see some heavy volumes here. What's this heavy volume here? A big gap down. This was earnings. Okay, this was earnings day. So huge gap down, a little bit of accumulation there. Definitely some buying throughout there. And elevated volumes on the way down is usually not a good thing, implying further distribution. So a little bit of accumulation, but not a lot. Next is Microsoft is number 2 today, ladies and gentlemen, in terms of market cap. So one of the highest volume days there, big accumulation bar. That's good, and that has actually sustained us in this endeavor to the right. Some accumulation right there. Definitely some accumulation here. This was a pretty big whipsaw day. Distribution. So this was earnings. Big gap up on earnings. Big sell day. Pretty big sell day here. There was some accumulation here, but so decent accumulation on Microsoft. Amazon is next at 779 billion. See if we see any accumulation here. Look for those highest volume days. So here's kind of a high volume day, or one of the biggest high volume days. Hold on a second. So here's the biggest volume day, again, after earnings, which is normal, and a doji day. Look at that, pretty much closing right in the middle. So some accumulation right there. Also another doji day, some accumulation going to be right there, absolutely. But obviously a gap down after a big drop. Some accumulation there, some accumulation there. That would be an accumulation day. This would be a nice accumulation day, but volume was very muted. And a good up day there, a decent up day there. So Amazon, some accumulation, not a ton. Google's next. Google, not a lot of high volumes at all, actually. Not on the sell side nor on the buy side. Look on the drop here. One large sell candle right there. I'm assuming that's a Monday? No. That's a Friday. That could be a triple witching Friday, September. That should be a triple witching Friday where options, futures, and a bunch of stuff expires at the same time. So got to kind of take that with a grain of salt right there. The biggest volume here, again, after earnings. It closed well off of the lows. Obviously, it's showing a red day because it closed lower than this day, but look, it closed in the top half of the range. Decent accumulation there. The next day was a gap and crap. Pretty big sell day. Some accumulation towards the lows there as well. Muted volumes down here. We'll see if this flag, the little flag here, we'll see this how this resolves itself. Kind of right there in Google, but no major distribution in Google, no major accumulation. There's some kind of 50-50 there, so nothing super happy thus far. Berkshire Hathaway. Look at the A-shares sitting right near towards highs already. They're liking Berkshire. No one's selling Berkshire here. Berkshire /B is cheaper shares, and Oh, no, that's, no, BRK/B. Okay, there we go, Berkshire. So same thing on the /Bs. Facebook, let's see if Facebook is showing any major accumulation. Wow. I would say the opposite of accumulation at this stage of the gauge. Major distribution in Facebook. When this thing bottoms, this could be a great buy if you guys want to kind of catch a, not quite a falling knife. 400 billion market cap as of right now. Really taking it on the chin today. Let's zoom out here. Not major distribution. Look at the volumes. You had much higher volumes around here. That's a big buying candle right there. I'm assuming they're still holding that position. There's some selling here, but you can see elevated. So there's some buying here. So there's definitely some buying in here by institutions. So far, not much on the right side of this chart. Still having lower volumes, but prices are just dropping like a stone. So I would assume in the shortish term future, we're going to come up to what could be a really big buy point in Facebook, maybe down towards this trend line. I'll extend that out. Maybe towards this trend line around $100. I mean, that'd be crazy good in Facebook. This is a very well profitable company, ladies and gentlemen. So, what's Facebook's PE? Facebook's PE right now is only 18, which is relatively low for a pretty good company. So those are kind of the top ones. Those are the top. Baba would be next. Baba's a Chinese company. Slightly different scenario here. The fact that it's going to be an ADR is going to be a little bit different. But still some accumulation right there. A little bit of an uptrend in Baba. Johnson & Johnson. Now we're getting back down into consumer staples. Johnson & Johnson poking at highs. But actually, that was our level for Johnson & Johnson. Looking really good. So, yeah, I'd say overall we have some decent accumulation. Hopefully things will maintain healthy, but we're going to have to wait for some of these tech names to sell off from what it looks like. All right, guys, I got to run. I only have about 30 minutes to the power hour. I got to do my newsletter and feed my kids, so I'm going to get out of here. Day's not looking good so far. We're back down here at 2%, over 2%. Yeah, with that, yeah. So we'll stop at some point, guys. It's just hard to say where it is. But at this stage in the game, I don't know if all cash is good. I would say definitely keep some market exposure, at least in the indexes. And in the individual names, it's going to be different. Facebook looks horrible. Apple doesn't look very good. Amazon doesn't look very good. But if you have other stocks that aren't looking horrible, Tesla looks pretty good. You can keep some of those names that are holding up, but the names that are falling apart, you may want to lighten up on some of those. But I would stay at least half invested in the indexes. Even if we break this low, we're going to take another leg lower maybe. I don't know how many legs lower we have yet left to go. So I got to go, guys, but looks like we're falling off here now, down 2.25%. And we'll see where we end up from here. So, all right, guys, stay safe out there. Have a good day. See you in the power hour in a little bit.